Hi, welcome to another 25 minutes of the only weekend business program, Capital Market, right here on Channels Television. I'm Ladi Williams, and as usual, let's begin the show with a quick review of major global stock markets performance at the end of the week. And let's kick off now with Asia. We see Hong Kong stocks led losses in Asia. That was on Friday after Wall Street tumbled overnight on rate worries, while investors also digested inflation data from Japan. We see the Nikkei there was down 1.17%, Shanghai Composite 0.88% down. The biggest downer, Hang Seng Index, 1.38% drop for Friday. To Europe now, while the European Central Bank still looks on track to begin cutting interest rates in June, the Bank of England's own course is thrown further into doubt this week by the hotter than expected inflation figures. And we see the FTSE 100 was down by 0.26%. The DAX, that managed a marginal gain there, 0.01% close on Friday, while the CAC 40 in France was down marginally, 0.09%. Let's take it on to the U.S. now. We see it was mostly green right there in the U.S. Tech-heavy NASDAQ, 1.10% jump there, be the biggest mover for Friday, while the Dow Jones Industrial Average 0.01% up, and we see the S&P 500 closing at 5,304 points, 0.70% gain on Friday. Let's get a check on U.S. market performance this week, and it's all about Nvidia posting a stellar Q1 performance for 2024. Join me now is Olumide Adesina, financial market analyst. Great to have you, Olumide.
Good evening.
Good evening. So we see Nvidia was a star this week in the U.S. with a record quarterly revenue of $26.0 billion, up 18% from Q4 and up about 262% from a year earlier. Quite impressive performance there. And I'm wondering if it still has legs as this stock it crossed $1,000 in trade. I'm wondering if it still has legs over $1,000 at this point, or is that the top?
Well, I think short sellers are getting burnt right now. The stock has grown so fast that if you look at the market valuation of Nvidia, it has a market value of $2.6 trillion. It's now the third biggest company on earth. And if you look at the valuation it was last year, it was pretty much behind Tesla. So I think what the earnings result highlighted was that we are seeing strong demand in data service sector. You know, we are in an era of consumer internet companies where the demand for enterprise AI, automobile chips, like we've seen in Tesla, and also the fact that health enterprise are also including into cloud computing, the demand is high. I think when you look at the results, it surprised a lot of Wall Street analysts, and that was pretty much because competition between Microsoft, Google, and Amazon in that space felt that there should be some moderation. But it looks like Nvidia is breaking all cylinders, and in fact, it contributed to about 86% of its revenue. So I think it's fair to say that that stock is really a golden nugget in our time. And, you know, probably look at what you said, it broke above the $1,000 resistance during the week, and it seems like it's going to the 1,100. But unfortunately, I think for accessibility for retail, there was a stock split of 10-1, and definitely that will take an effect on June 7th. So we're going to see the stock trading at around 200 if the price is at the present level. So I think for me, I think it's a very interesting scenario, and I think it's good for tech, but it's cannibalized other markets because we've seen the fact that just 9 companies are contributing to 16 trillion. Look at the NASDAQ and the Dow. It's on the record high, but primarily because of these gains. Microsoft is over 3 trillion right as we speak. Apple is moving close to the 3 trillion. So, Ladi, it's all about the tech giants right now.
All about tech giants, definitely. And talk to me about next week. What market moving data are you expecting for markets in the US?
I think it's a bit quiet for next week, but you look at Thursday, we're looking at GDP numbers. Definitely, it's going to bring how the US has performed relative to other quarter. But looking at the data in the United States, primarily it's been healthy, and that's why you could see that the US Fed is still looking at keeping rates cut off the table, despite with inflation being sticky. So the room to really be aggressive is still there. But I think geopolitical uncertainty in the Middle East and what is really happening in China, where there's clampdown on black market trading. We've seen record outflows that will create some unrest in the market. But it's fair to say that I think the US stock market will definitely oscillate within those ranges for the week.
Yeah, definitely be watching out for that. Thank you so much, Olumide Additional, financial market analyst.
Thank you for having me.
All right, let's bring it back home now. See, the NASD OTC securities markets performance ended the week positive as the index was up by 5.25% week to date. Quite interesting. We see the NGX going down, but the NASD been going up. At the same time, the volume of securities traded this week that was down by 81.33%, and we see value traded that was down 53.41% compared to last week, while the number of deals carried out was 225. Top advances for the week, Nearest Arido Holdings PLC, Afriland Properties PLC, and Industrial and General Insurance PLC, while the top decliners are Friesland Campina Wamco Nigeria PLC and Geofluids PLC. And to the latest MPC decision now, we see the benchmark interest rate this year, that's up 750 basis points. Let's get a quick summary now. Listen to the central bank governor from earlier this week.
The committee's decisions are as follows. 1. Raise the MPR by 150 basis points to 26.25% from 24.75%. 2. Retain the asymmetric corridor around the MPR to plus 100 to minus 300 basis points. 3. Retain the cash reserve ratio of deposit money banks at 45%. And 4. Retain the liquidity ratio at 30%.
So there you have it. It was a bigger than expected hike there for the MPR. Let's get a review of the NGX performance for the week. Joining us now is Mr. Samuel Showame, is a financial professional in Iron Global Markets Limited, joining me right here in the studio. Great to have you. Good evening.
Yeah, it's my pleasure to be here this evening.
So it's another hike, as expected, but bigger than what most analysts expected. We're thinking around the range of 100 basis points, but we had 150. So talk to me about how markets are receiving this latest hike.
As we all know that currently what the CBN is trying to do is to tame inflation. And as a result of that, we believe that taming inflation, we need to increase the MPR so as to mop excess liquidity in the market, then also to ensure that there is a bit of stability in terms of price. Coming to the market, the news was not that shocking, and if you look at the rate at which the CBN is hiking the MPR now, you will notice that it is at a diminishing level. The first time we had a 400 basis point increment. The second time we had 200. Now we have 150 basis point. That speaks volume to the fact that CBN is watchful of what the effect of this hike is having on the market, is having in terms of investment, in terms of cost of borrowing, and in terms of productivity. You and I know that the more interest rate continues to go up, the more it becomes disincentive to borrower. And once borrowers are beginning to lose interest in borrowing new fund for the purpose of expansion. Technically, what we are doing is that we are contracting productivity. And then who are going to bear the brunt? It is you and I, the final consumer. Because as interest rate continues to go up, manufacturers, producers of goods and services, they have a way of transferring the additional increment to the final consumer through their, sell.
And I wonder how much
their
the
selling
final
prices.
consumer can take, at this time, because this is demand destruction right there.
You are right. Now, the adverse effect of this is that disposable income is not increasing. The more the risk rate continues to go up and the more the producers of goods and services continue to hike their own price, then the marginal propensity to consume on the side of the consumer will continue to diminish. It will get to a point that even the so-called producers that are transferring the additional cost to the consumer will get to a point that they will not be able to do that. And once that starts to set in, what we will be heading towards is that we will begin to see producers, manufacturing, laying off staff because they have to find a way of meeting their own variable cost and fixed cost. So I think to a very large extent, the government needs to be careful with the way we are going. Fine, we could see that inflation is rising, but we could look at alternative way of managing it because we have to be, we have to be conscious of not disrupting demand.
Right, and talking about demand, we got that the GDP data for the first quarter of 2024. That was yesterday.
Yeah.
And looking at the numbers there, 2.98%. That's a number higher than the first quarter of 2023.
Yes,
but lower than the 2023, that's the fourth quarter in 2023. Yes. So I'm wondering, we had about 600 basis points hike in the first quarter of 2024. Is that what's playing into the number?
Definitely. You remember first quarter of 2023, the GDP grew by 2.31%. You and I know what happened during the first quarter of 2023. Because of the redesign of the Naira policy that came in, that nearly ground the economy. But coming to this year, as at Q4 2023, we must understand one thing, that each quarter have its own peculiarity. Moving into fourth quarter of the year, everybody wants to, come out to fight out their life for, let's see how the year is going to end. So that energy definitely will gonna galvanize a lot of economic activity. But coming to Q1 2024, if you look at what the exchange rate was as at the end of Q4 2023, you will see that when we got to Q1 2024, it went exponentially high. You understand? And that affected a lot of economic activity because there was disruption. Nobody was very certain about the direction of FX. And you and I know that Nigeria still largely is an import-dependent economy in terms of our consumables. You understand? So that accounts for what we saw in the GDP slowing down below what we had in Q4 2023. But coming to Q2 now, like I said the other time, you will observe a lot of activity, especially in this month of May. There are so much activity, and that's reflected in what played out in the FX market as well. You could see that Naira slides, got to a point, it rebounded again. You understand? That shows that there were a lot of demand on the side of FX for people, trying to import more raw material into the system, for those that are importing finished good as well. You understand? So there was demand. And at the same time, CBN tried to make sure that they match up demand. If you look at the last intervention that CBN there did on FMDQ, you see that there are a lot of supply into the market just to make sure that at least we create a kind of level of stability in the market. So there's a lot of positive going into the second part of the year. Now we are moving towards the end of May. We'll be eating the last month in the second quarter. We can only hope for the best. And if we don't forget, as at last year, the annual GDP growth rate was 2.74%. Cumulatively 2.74% for 2023.
Right.
But for 2024, there is a lot of positive. We have seen series of initiatives taken by CBN, series of initiatives taken by the fiscal authority too on the fiscal side of things. We've seen a lot of energy in terms of trying to woo investors to come into the market.
Some will say, they've not seen enough on the fiscal side, at this time.
Well, it's a gradual thing. It's a gradual thing. We shouldn't forget the fact that this is by May 29, we'll be marking the 1 year, of administration of this new administration. It takes a time, especially in an economy where you are just trying to now reshape your economy into a more data-driven economy. You understand? An economy where people should be able to rely on economic data as they come out. You understand? So it will take a time before we can actually settle in very, very well.
Right, because we need to take more data, in Nigeria at this point, so we understand, some of these policies we're taking before we bring it out.
Yes,
we already know what the impact, is going to be. But we'll take a quick break now. When we come back, we'll dive further into the markets and see how, markets are playing out and where the bottom is. That's for the NGX. We'll continue right in a moment. Just stay with us. Welcome back. Well, let's get back to the markets now. We see it's another negative week for the NGX this week, and we see the banking counter again was down. If you look at the sectoral performance right there, and we've seen the banking counters contributed continually to the downtrend we see on the NGX. Yes, another big 7.35% drop. And it's financial services again that's down for this week, with insurance following with a 3.50% drop. But consumer goods, industrial goods, and oil and gas were the winners for this week. All right, I still have with me Mr. Showomi Samuel Sholanke, finance professional, Ion Global Markets Limited, still with me in the studio. Thank you for staying on.
Yeah, it's good to be here.
Yeah, talking about the NGX at this point, we're seeing this downtrend continue with that sectoral performance. Now we see the banking counter, another big drop, 7%. And I'm wondering, where's the bottom? Because I know it started, that's the banking index, started at over 1,000 points. I think it's tethering around 700 to 600 at this point. Where do you see the bottom?
Oh, well, what we are seeing with the banking sector is not surprising. It's just a reaction from the market due to the movement in interest rates. You understand? So because we all know that investors are rational, they want to position where they're going to get the highest return on their investment. And we shouldn't forget the fact that coming from last year to this year, this set of banking, companies, they have rallied so high. A lot of them have done up to 300, 400, return on investment. Now that interest rate is rising like this, fixed income,
rising interest rates, that's good for the banks.
It works in two ways. Now, for portfolio manager who are in charge of people's investment in them, who have invested in banking equities, definitely this is the right time for them to exit and position in a risk-free instrument. These days, CBN is issuing out treasury bill at a very good rate. The last one they did was 26.2. You understand? That was last week, Thursday. You understand? It is quite interesting. It's very, very attractive. Definitely, common sense demands that portfolio managers will exit equity and go and position in fixed income. So, for the Nigerian economy, it is not a bad omen at all. It is just a movement from one asset class to another asset class. The money is not leaving our economy. It's still within the economy. When the time for rally starts, definitely, by the time they enjoy their investment in fixed income, by the time some of these investments are maturing, they are going to move the cash again into equity. By that time, equity would have been reaching the bottom level, the support level. Don't forget, every asset, regardless of how high you go, there will always be a point of resistance and a point of support. What we are saying now is more of correction. People are taking investment decisions that are suitable to them, looking at the trend in the market. Nobody wants to be caught off guard. You understand? You see that there is an asset class that can give you higher return. Why do you have to keep locking on, where you have already, accrued up to 200, 300. If you exit at about 150, you are not losing. Then go and position where you can now double it again.
But looking at at the banks at this time, I know some investors be wondering, where can I start, naira cost averaging or dollar cost averaging, at this time. But where do you think should be the sweet spot, for this banking counter, for you to say, okay, this is where I should start getting back in?
If I may tell you, some of the stock now, they are moving towards their fair value. If you sit down as an analyst and you do a kind of valuation, you would know that truly what we are saying now is almost the fair value of these stocks. Truly, you understand? So if we get to that point, then the supply side of equity would dry off. Then the demand will begin to pile up again. You understand? So it's a normal thing in the market. Market is information driven. Immediately CBN announced interest rate hike, definitely responses will come from the market, especially for big portfolio managers to position, rebalance your portfolio so that you can gain the highest in terms of return on portfolio to your investors.
Right. I'm talking about rebalancing portfolios at this time. We see the SEC approved International Brewery's 161 billion share right issue worth about 588 billion. How do you think investors should position for this rights issue season, at this time? Because we know the banks are also going to, have to get out some more shares. At some point.
Definitely. Well, in terms of Nigerian breweries is more or less a legacy company. You understand? This is a company that has been there over 50, 60 years in Nigeria. You understand? And it is a company that has very good track record in terms of dividend payout. But something significant happened to that company last year, which was the FX loss. Now, for them to come back to life, the board and management seek the resolution of the shareholder to support them to raise funds. Where do they want to raise this from? They are targeting their existing shareholder, not forgetting the fact that about 65% of the holdings in Nigerian breweries is in the hands of 3 foreign investors. So right issue for such company will be very, very easy to do. You understand? So the offer will sell easily. They are not looking for a new investor to come and raise capital for them. It is just within the existing shareholder. So we can be very sure that they will the offer will succeed.
All right. So what are you expecting for the market next week, the equities market?
Going into the market next week, fine. The market will still continue to find a balance in terms of reacting to the new interest rate hike. The banking sector may still be the target in terms of exiting. You could see that the consumer goods sector and the industrial goods sector and the oil and gas goods sector, they closed high. Such trajectory may continue next week. You understand? But for some high income paying stock around the banking sector, you could also be preparing to see a kind of rally, definitely, because don't forget, most of these banks are owned by Nigerians, which value is tied to the movement and price of those stocks. They too, they will not open their eyes and continue to see their value being washed away. Something will definitely happen.
Well, we'll definitely keep watching and see if we can get some kind of green close. Hopefully, next week we'll definitely watch out for that. Thank you, Mr. Shomi Samuel Sholanke, finance professional, Ion Global Markets Limited. It was great having your perspective today.
It's a pleasure to be there.
Thank you. All right, so that's the show for the second to last week of May. I'm Ladi Williams, and remember, if you must sell, find the top. Bye-bye.